Number 167 to 171. These facts are relevant from for these questions 167 to 171. So let's gather the information. I will increase the font size maybe to 14 so that it is visible, and the alignment should be left. All right. Jeffers company prepares financial statements for the year ended 31st December 2018. The financial statements are expected to be authorized for issue. Okay. Authorized for issue on 15th March 2019. Looks like it is related to, events after the reporting period because we are getting these two dates. The period ended and when the statements got authorized for a issue. The following three events have occurred in January 19. Okay. So January 19 events. All right. First one is health and safety fine. A health and safety investigation of an incident which accrued. It is about health and safety fine. So this occurred in 2018. Okay, it occurred in 2018. Was concluded in January 9. Mhm. So it occurred in 2018. Okay, and then it got settled in January 19, resulting in a 1.5 million fine. Okay. A provision for $1 million had been recognized in the financial statement, and they recorded a provision for provision of 1 million. Okay, provision recorded how much? 1 million. These are just the facts. We don't know the ask, but let's go through all of these things. Then the second one says there is a customer ceased trading. Notice was received on 10th January 19. 10th January 19, they received the notice, okay, that a customer owing 1.2 million, probably we can keep all the amounts in one column for ease of understanding. So 1.2 million is the amount from a customer. He or she owes us at 31st December 18 had ceased trading. So it will, I mean, it is unlikely that the debt will be recovered in full. So looks like it is bad debts. Hmm. So we got this notice on 10 January 19, but the event happened. So maybe we can say that when we got to know about this, we got to know about this on 10 January, and but this condition was existing. The customer was owing it on 31st December. I mean, it also occurred in 18 only, I would say. Okay, it also occurred in this, but yeah. Hmm. Customer seed trading means we can say, I mean, bad debts, and it also occurred in this, but all right. Third scenario, acquisition of a competitor. Acquisition of, or just say acquisition. The acquisition of a competitor was finalized on 10th January 19. So they finalized it on 10th January 19. This thing also. Being the date Jeffers company obtained control over the competitor, negotiations in respect of the acquisition commenced in May 18. So negotiations started in May 18, but I don't think it is relevant. That doesn't matter. You started, I mean, it got finalized on this, so this is the date relevant for this acquisition. Okay. Do we have any further information? Yep. In addition to this, there is an outstanding court case. Okay, so there is a fourth thing, that is the court case. 31st December 18. So it existed on 18. Okay, so I will paste it here. I will paste it here. It existed in 18, relating to faulty goods supplied by the company. Legal advice states that there is a small chance, okay, So the chances are like, further information we can write down. There is a small chance that they will have to pay out 6 million. Okay. In addition to this, there is an outstanding court case at 31st December 18 relating to faulty goods supplied by the company. Legal advice states that there is a small chance that they will have to pay out 6 million, but the most likely outcome is believed to be a payout of 5 million. Okay. So this for 6 million there is a small chance. Maybe I can keep it here. And there is another most likely outcome is that they will have to pay 5 million. Okay. I think this is more relevant. Most likely thing is more relevant. Either way, Jeffers company will have to pay legal fees of 0.2 million. So this will be legal fees they have to pay in both the cases of how much? 0.2 million means 200k. All payments are expected to be made on 31st December 19. It doesn't matter when we will pay. I will not note it down. Hmm. Payments will be made in December, that's okay. But on this date, we know some reasonability. And there's a cost of capital of 10%. All right. All right. Cost of capital means had the money been invested somewhere else, 10%, and discount factor. So had the money been invested somewhere else, they might have got some, you know, return on that. So that is cost of capital, and the discounting factor is 0.909. All right, a lot of information. This company believes the fault lies with the supplier and is pursuing a counterclaim. Legal advice states that it's possible but not likely the action will succeed. Okay, I mean they are fighting it back about this court case, but not sure. Okay, what is the question then? 167. Which, if any, of the following statements regarding IAS 10 events? So IAS 10 deals with events after the reporting period. So, all right. So the first statement, what they say, events after the reporting period are deemed to be all events from the date the financial statements are authorized for issue up until the date of the annual meeting with the shareholders. No, no, no. What do we mean by events after the reporting period? It means that a period end. When does the period end? Hmm. And when when does the period end and when it is authorized to be issued. Okay, between these two, whatever events happen, we say that events after the reporting period, huh? Not that annual meeting. So first one is not correct. Okay, second one, non-adjusting events. It is talking about non-adjusting events do not need to be reflected in any part of the entity's financial statements. Or no, it is not like that. Even if that, events are not adjusting, we may need to include it in the disclosures. So both these statements are incorrect. So the answer will be fourth, neither one nor two.